Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. In this video, we'll explore how you can get started with sustainable forest assets and the advantages of long-term investment in timberland. Forest certifications. Two top certifications: Forest Stewardship Council and Sustainable Forestry Initiative. These set the bar for responsible forestry. Properties with these certifications must limit harmful chemicals and clear-cutting, protect rare species and key habitats, support local communities and workers, maintain strong records for transparency. Buying or managing certified timberland signals commitment to high environmental and social standards. It also opens doors to buyers who want only certified sustainable wood. Preserving biodiversity. Forests are home to countless plant and animal species. Good managers keep different tree ages, leave patches of old forest, and protect streams and special sites. These steps help threaten wildlife and create richer, more resilient forests. When managed right, timberland is more than a moneymaker. It's a way to keep forests healthy for future generations, while still providing essential wood and jobs. Timberland's role in carbon sequestration and climate strategy. Timberland investments are powerful tools in fighting climate change. Forests pull carbon dioxide from the air and store it as they grow. Managed well, timberland keeps this carbon locked away or reused for decades. Carbon capture. Trees act like natural air filters, absorbing carbon as they grow. A new plantation or managed forest takes in more carbon each year. When timber is turned into long-lasting wood products like buildings, much of that carbon stays out of the atmosphere for years. Offset programs. Many timberland owners now take part in carbon offset programs. Here's how it works. Forest owners verify how much extra carbon their land captures. They sell carbon credits to companies needing to offset their own pollution. The revenue provides a new income source for well-managed forests. How to invest in timberland. Adding timberland to your portfolio can be both rewarding and practical. But timberland isn't a one-size-fits-all investment. Ways to invest, how you get paid, and what risks you take can vary. Here's a smart, simple look at the building blocks you'll need to get started. Ways to access timberland investments. There's more than one way to own a piece of a working forest. Your personal budget, time, experience, and interest in management will shape your path. Direct purchase. Buying timberland yourself means you own the land and trees outright. You make all management choices, from when to harvest to conservation tactics. Direct purchase demands more upfront cash, time, and forest knowledge. It also offers the greatest rewards and risk. What you put in, you get out. Timberland funds. Timberland funds bring investors together to buy and manage forests at scale. You buy units in the fund, which acts like a private club for people serious about timber. Professional managers handle everything, and you get returns from timber harvests, land sales, and appreciation. These funds often require significant minimum investments and can be less liquid, but suit those preferring a professional touch. TIMOs. TIMOs specialize in forest management for institutions and wealthy investors. You pool money with others, and the TIMO team runs the business, buying, selling, planning harvests, and keeping forests healthy. While this is typically for larger investors, some TIMOs partner with funds that accept smaller checks. REITs. Timber REITs are stocks listed on exchanges, making it simple to buy or sell at any time. They own and manage vast acres of timberland and pay out most profits as dividends. You get exposure to timber without losing liquidity, making REITs a favorite for casual or retirement investors. ETFs. Timber ETFs bundle several timberland REITs or related forest product companies into one investment. ETFs give you instant diversification and let you join the timberland sector with just a few clicks. They trade like stocks and provide broad exposure. Natural risks. Nature has a way of throwing curveballs. Wildfires, pests, disease, and storms can impact timberland's profitability. Invasive species like the emerald ash borer can destroy valuable trees, while droughts can stunt growth. But the long-term nature of timberland investments often helps to mitigate short-term losses caused by natural events. Diversifying across different regions or property types can also lower exposure to localized risks. Market fluctuations. The price of timber can fluctuate with market demand and broader economic conditions. While timber tends to follow a relatively stable cycle compared to other commodities, it's still susceptible to the whims of global supply chains, especially if timber is being exported. The global demand for wood products, construction booms, and shifts in manufacturing can all impact prices. Keeping an eye on the market and knowing when to harvest is essential for managing these fluctuations. Regulatory and legal risks. Timberland investments can be affected by changing laws or environmental regulations. Restrictions on logging, changes in land use zoning, or stricter conservation policies may impact your ability to harvest timber or make a profit. In some cases, government actions like land conservation programs or protected species regulations could limit what you can do with the land. Staying on top of these changes, especially when investing across multiple regions, is vital. Liquidity risk. Timberland is a relatively illiquid asset, meaning it may be challenging to quickly sell your investment. Whether you own land directly or invest through funds, selling timberland can take time. With direct ownership, you'll need to find a buyer or negotiate a deal through intermediaries, which may not be quick or easy. This makes timberland best suited for long-term investors who can handle the lack of liquidity and are willing to wait for their returns. Management and operational risks. If you're not personally managing your timberland, you're relying on a team of professionals to run things efficiently. This introduces management risk. Poor decisions on when to harvest, how to manage the forest, or where to sell timber can eat into returns. Choosing a reputable fund manager, TIMO or REIT, with a strong track record is crucial to ensuring your timberland investment is properly managed. Economic risks. Broader economic trends can also impact timberland investments. A recession or downturn in the housing market, for instance, could reduce demand for timber and lower prices. However, the cyclical nature of the timber market often provides some protection. Even during recessions, timber can be a stable hedge because of its status as a real asset tied to natural resources. In the long run, timberland tends to outperform other asset classes. Diversification benefits. One of the main reasons timberland is appealing to investors is its ability to provide diversification benefits. Because timberland often behaves differently from stocks, bonds, and even other forms of real estate, it can act as a buffer against the volatility of traditional markets. Its low correlation with stocks and bonds makes it an attractive option for portfolio diversification. By adding timberland to your portfolio, you're making an investment in something that grows in value over time, both biologically and financially. Whether you're investing for long-term capital appreciation, steady income from timber harvests, or a mix of both, timberland can offer a unique and valuable addition to your asset allocation. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.